Hi, everybody. Thank you so much for everyone here for joining us. And thank you very much to Ali and the Bach Launch team for always giving us a platform to share a lot of the things that we do. For those who I don't know, my name is Kulsum Lakhani. I am the co-founder and general partner at iDive Ventures, an early stage venture capital fund. I'm also the founder of Invest to Innovate, which is the company that produced this Boxon Startup Ecosystem report, but has been producing insights about the Boxani startup ecosystem for the last 10 years. I'm joined by Sarah Munir, who's the CEO of Invest to Innovate, and also Amna Masood, who is our head of insights. And we're going to be taking you through the Boxon Startup Ecosystem report for 2024. This is the fifth edition of this report. We've been doing and benchmarking the ecosystem really since 2014. And I just wanted to share a little bit first about Invest to Innovate and what we do, but then also how and why the Pakistan Startup Ecosystem Report really came to be and why it's so important. I'll do a little bit of framing and then we're going to dive into the methodology as well as some of the biggest highlights and insights, some of the biggest challenges also, and finally the recommendations and opportunities. What we'd love from you guys, this is a report that we produce, but also it's supposed to be really the grounding and foundation to have conversation and discourse. Ideally, people looking outside into Pakistan will have deeper insight into what's happening in the market and going beyond just the numbers that we typically see. But also for people within the ecosystem to be able to see what the opportunities are, where the challenges are, and be able to build smarter. That's always really our ideal outcome here. And we'd love for this to be a conversation. So feel free, as always, to drop questions in the chat. As you know, as we're speaking, I will be kind of leading the discussion and moderating. So I will try to get to as many of your questions as possible throughout this whole discussion. So less of, maybe kind of getting into the granular details of the report. And actually what we can do is maybe Sarah, if you want to drop the link to the report that's in here. It was released last week, but we can send you guys the link here. Feel free to download it. Also, feel free to ask us questions, to the report itself, but also maybe bigger questions about the ecosystem as a whole. Because as I'll share a little bit about both Invest to Innovate and the fund, we kind of have a really, front row seat to building the ecosystem, which actually is what helps make a lot of our insights richer. We're not just a researcher or a research firm doing this. Um, I think that's all on logistics. And thanks, Sarah, for sharing the link. When it comes to Invest to Innovate, as I mentioned before, I'm been the founder of Invest to Innovate. I started the company in 2011. Sarah is now our amazing, illustrious CEO running everything. I now run our venture capital fund with my partner, MISPA. But just to give you a sense of Invest to Innovate, we were really started to, before the startup ecosystem was really a startup ecosystem, we began really as a player to help kind of build the startup space along with many others that are in the ecosystem and obviously players like Bach Launch now. We started the Boxon's first startup accelerator program back in 2012 and have since scaled that to a number of other programs that we've run both in Pakistan as well as in the region. We've also graduated to supporting other entrepreneur support organizations globally, specifically in the region and in Pakistan. But just to give you a sense of the impact there, since we began in 2011, we've trained over 1,000 startups, nearly 700 women founders. We've trained about 190 incubators and accelerators, and we've actually helped those founders that we've worked with raise of over $16.5 million. And so right now, currently, the Invest Innovate is running something called iDive Ecosystem, which is an initiative supported by the Visa Foundation, running a number of programs there. The Insights arm was really launched in 2014. So really, as we were starting to build the startup space in Pakistan, realized, my whole thing with building Invest to Innovate was, the belief that potential exists everywhere, not just in places like Silicon Valley. So how do we unleash that potential? And while we were working really closely with entrepreneurs in Pakistan, connecting them to investors, really working with other stakeholders in the space, we realized that a lot of people were still seeing outside in only really the big negative headlines about Pakistan. And we really believed as this ecosystem developed that it was really important to tell a data-driven story about what was happening in the startup space and really kind of give a bit of weight and tangibility to what was happening here. So it was born in 2014, really because someone said, from the World Bank, honestly, to me, can we download the information that's in your head into a report? And that's really how the first startup ecosystem study was born. And since then, we've since done it in 2014, 2017, 2019, 2021, and now the fifth edition here, which was really guided by Amna and the Insights team, is out. And it's really a deep labor of love of everything that's been happening. And I think what's important here is we can look at startup funding numbers, and I'm going to give you what those numbers have looked like over the last 5 years because a lot of people look at that as a benchmark. But what I think is also really important after I give you those numbers, and that's what we're going to be diving in today, is what are the stories between the numbers, right? Why has startup funding dried up so considerably? But at the same time, where are the opportunities here? What are the bright spots? What are the highlights that we should be paying attention to? So if we were to look over the last 5 years, in 2019, Pakistani startups raised $47 million in funding, and that was an increase from the year before. And, as someone who's operated in the Pakistan startup space really since 2011, I've really seen kind of a steady increase happen. In 2020, that number increased to $64 million. 2021 and 2022 were really kind of these, not outlier years, but like this in part of this broader global inflation of increased liquidity, low interest rates, and an overall influx of capital going to across the world, but a lot of it also going into emerging markets. And Pakistan all of a sudden was deemed a really attractive market for international VCs who, wanted to put their money into a market that they hadn't really tapped into yet. And Pakistan was really ripe for that. So in 2021, we saw that number increase to $354 million in funding, which was a 6x increase from the year before. 2022, that was $356 million. And that's also because we just saw very large funding rounds take place, right? We saw the Airlifts raise like lots and lots of money in their Series A, Series B rounds. Bazaar obviously also raised, and in the introduction of funds into the market like Sequoia, like Tiger Global, all of that. 2023 was kind of that come down year where we saw the global correction really take place. Obviously, we've seen what's been happening with the war, interest rates going back up, VC funding scaling back. And in Pakistan, obviously, from a macro perspective, we're really kind of seeing that change happen in terms of both from a political instability standpoint as well as macroeconomic instability. And that's really impacted just generally a market perception in terms of international VCs wanting to put money into Pakistan, but also that push-pull, right? If we're seeing, not a lot of money coming in, we're also seeing a lot of founders not wanting to go out to the market to raise as well. While I see hands up, if you can actually put your questions in the chat, we'll get to it at the end. Also, at the same time, Amna, if you can share your screen so we can also start to see some of the things that I'm talking about, that would be really helpful here. And so just finally, just on that, we were starting to see those numbers come down thanks to the macroeconomic conditions. So 2024 so far, what we've seen year to date is about $42.5 million year to date raised. And this includes obviously the LAM amount that just announced last week. In the report, we actually have it as 37 million, and that was because the report went to print before that announcement came out. So just keep that in mind. This is as of November 2024. If we include the Alam amount, we're so far at $42.5 million in funding. So again, a far cry from where we were just a few years ago, but also what we're seeing is, valuations are coming down. The amounts being raised are also coming down, which, to be honest with you, as someone who's also an investor in the market, I think Pakistani companies really can do a lot with very little. So as much as it can be a little bit disconcerting and maybe disturbing to see those numbers be so low, there are a lot of bright spots that happen. And I think that's what we're going to go into now is that while the global macros and the local macros are really impacting commerce, impacting market perception, at the same time, this report really goes into every single lever of the ecosystem. What have we seen increase? What have we seen decrease? What are the things impacting what's happening? And I think it's really important to take that ecosystem style approach in what we're doing. Amna, can we share screen, please, so we can kind of jump into all of this and the methodology?
It's somehow not working at my end. Not
Let
able
me
to
see if
share.
I can share. Hold on. Just one sec, guys. Okay, one second. Hopefully this works. Can folks see my screen? Let's see if I can move this up. Let's see if I can move present. All right, can you guys see my screen?
Yeah, we can say it, Kulsum.
All right. I'm going to throw it to Amna to maybe describe a little bit more about the methodology that we used in doing this study, which is obviously very hefty. It's a little, I think it's over 100 pages, this study. So just keeping that in mind, we just wanted to share a little bit about how we approached the study itself.
All right. Thank you, Kulsum, for a very comprehensive overview. So I'll take it up from here to give you a deeper understanding of how the data was gathered, what it entailed, and also to give you a brief walkthrough of our research methodology. To structure our analysis, we used the Anti-Entrepreneurial Ecosystem Diagnostic Toolkit, which examines 8 critical dimensions, from finance and policy to culture and business to sport services. These are the 8 dimensions that we have measured and rested our conversations around to form the core building blocks that can be evaluated to assess the health of any entrepreneurial ecosystem across the world. The selection of participants that we did was done with an understanding to make sure that we have individuals with enough experience and exposure so their insights could provide us deeper understanding into their journeys and experiences and can also lend back to the original analysis that we are conducting. For a comprehensive perspective, we have gathered data from 6 key stakeholder groups. These range from startup founders, ecosystem support organizations, and investors. Other than this, we have also spoken with leadership from the development sector, professional organizations, and associations, and experts from industry and academia. Lastly, we engaged with policymakers who shape the regulatory environment and leaders from various other organizations to understand the challenges faced by the broader business landscape. The triangulation of these perspectives has helped us to form a very targeted analysis around the key thematic areas as they emerged. By using this mixed methods approach, the findings and analysis have given us a nuanced understanding of the challenges, yet also hinting on the opportunities that we have within the landscape. With now, I will hand it over to Sarah to give you an overview of the key highlights that the thematic analysis uncovered.
Awesome. Thank you, Amna. And thank you, everyone, for joining us. This is super exciting to be able to present all this work that took us over a year to put together. And before I get into the highlights, I just want to point out 2 things. What's unique about this edition is that we didn't just look at the past 2-3 years. We kind of took a zoom out approach and studied the ecosystem from a big picture lens. Because while if you just focus on 2021 to 2023, things might seem a little bit dark. But if you really zoom out and look at the big picture, there are trends, positive trends as well, that we can follow and learn from and also figure out where the opportunities lie. Secondly, we also opened up the scope a little bit. So we've looked at indirect factors and also direct factors that all play a role in shaping the ecosystem in the form that it stands in today. I'm going to touch a few key themes, which I believe are very crucial. Some of them are on the sidelines, some of them directly impact founders, investors. But we really need to understand what role each partner plays or each theme plays to fully grasp why we are where we are and where we can go from here. I'm going to start off with the founders and just the entrepreneurship landscape at large. So Pakistan currently ranks 91st in the Global Innovation Index, which still puts us behind peers like Vietnam and India. But if you look at comparative studies, Pakistani founders have a really high appetite for international business and are also extremely adaptable, which is kind of crucial given how much and how frequently things change within our local economy. The second really interesting thing that has happened in the past couple of years is that founder mindset has changed. So founders are now building for sustainability, and those are the founders that are surviving. They've shifted from that high burn, growth at all cost mindset. They're not using very capital intensive strategies, but are instead focusing on positive unit economics, which brings me to the infrastructure that supports these founders. There is no innovation without a digital infrastructure. And Pakistan's digital infrastructure has been growing, but there are still significant challenges. Our mobile and internet connectivity is severely hampered because of limited submarine cables. Our fiber network penetration is limited, and there have also been frequent outages over the past year and a half. Pakistan's domestic market is also very interesting. We have a huge informal sector. If I'm to throw out a few numbers, the undocumented sector stands at $457 billion in 2023, while your formal economy is at $340 billion. So there's a lot of unfair competition that formal businesses are up against. And the support ecosystem. So these are all your ESOs, your incubators, your accelerators, your corporate partners, corporate accelerators rather, that play a very crucial role in connecting founders to mentorship, to networks, to investors. They've also been blooming. For those of you who don't know, Pakistan had its first incubator in 2005, and currently we have over 90 incubators and accelerators in the country. And this is not just led by the government sector, there's also participation from private sector players, which is a strong signal in terms of funding and also interest. Co-working spaces are also on the rise. There are two key co-working players, Dr. Khan and Colabs, that also raised funding rounds. And Colabs is also thinking of a regional expansion into Saudi Arabia. So again, you have all these competitions, you have networks, you have co-working spaces, and you have all these healthy communities that are now creating supportive environments for founders who are operating in a tough economy. Policy and regulation, it has been a little bit of a challenge because policy changes are frequent, they're inconsistent, and they're also spread out across a lot of government bodies. So it's very hard for any single founder to navigate this ecosystem. But the good thing is that you have forward-thinking regulators like the SECP, the State Bank of Pakistan, the Special Technology Zone, and also the Pakistan Stock Exchange that are now acknowledging the innovation ecosystem. They're engaging with players here. They're trying to understand what the problems are. And they're also rolling out initiatives like the RAS payment system, the cloud first policy, which are all a signal of support and acknowledgement, of the role that these players play in moving the process forward. However, compliance and regulatory processes are still super complex. The tax burden is really high on founders. If you speak to most founders, that's probably their biggest problem point. And like I mentioned, policy changes are inconsistent, they're frequent, and that leaves founders who are already stretched too thin with an additional level of complexity that they have to deal with. On the funding and investment side, things have changed. If you look at the past few years, most of the funding came at early stages at pre-seed, seed levels. However, in 2024, majority of the deals were at Series A or pre-Series A level, which also shows that your ecosystem is maturing, your companies are reaching those stages, and then investors are backing them because they believe that they have the potential to grow further. Investment rounds usually are like foreign-led, or they're mixed rounds where there's participation by local players and also international investors.
Sorry, not to interrupt.
Yeah.
There was a question in the chat that maybe we can layer into this part of what you were saying. You mentioned about fintech. Someone was asking, was there any other industries that came up as like high in terms of amounts raised and all of that?
I'm just getting to that.
Perfect.
So participation from local investors, that includes angels and family offices both, is limited. It's far behind what countries like India have seen. There's very robust interest by local entities, and that essentially plays a very key role in moving the ecosystem forward. So while this is currently a challenge, this is also a big opportunity that we can work towards, and this is something that i2i is also actively building. We're constructing our own angel community so that we can connect them to the right deal flow, and local investment can also be encouraged. Coming back to your point and the question, there have been some sectoral shifts. So from 2015 to 2024, e-commerce led the way with investments. It had more than 50% of all investment raised, and it stands at $527 million. This was followed by fintech, which was at $277 million. But in 2024, there was a significant shift with fintech raising $30 million, while e-commerce just had one deal. This doesn't include the LAM deal, which stands at $3 million. So you kind of saw a shift where fintech is kind of leading the way and e-commerce has taken a little bit of a backstage. M&A activity has also been on the rise in the past few years. There were 11 acquisitions in 2022, 8 M&A deals in 2023, and then there was that significant acquisition of SadaPay by a Turkish fintech giant, Papara, in 2024. The last piece is on culture and media, because it has a very important role in how entrepreneurship is perceived and pursued in the country. So traditionally, we've seen very limited coverage by mainstream media of our local success stories, of the challenges founders face. And we've also not done a very good job at celebrating role models. So we have a huge economy that's made up of very successful entrepreneurs, but somehow they've not gotten the limelight or the center stage that they deserve. Again, there's an opportunity here and things are changing. So like with the onset of Shark Tank, there's a renewed interest and understanding of how this landscape works. There are a lot of new media publications who also understand the importance of covering this holistically, consistently, and these publications are kind of becoming that bridge point, that younger population, which 60% of Pakistan is under 30. So they're looking for these stories, and these new age, new media publications are kind of filling in that gap. I think that covers like the main highlights. And if you guys have any questions, we'll take those towards the end. Amna, now
There's a
hand it
lot of
back to you.
questions, so we'll get through this and then get to everybody's questions as much as we can. Go ahead, Amna, on the challenges identified in the report.
Okay.
All right. So thank you, Sarah, for handing it back to me. So I would now like to highlight the myriad of challenges that have created a systematic need for targeted solutions. Again, that is something that would Sarah again be taking back and running us through that. Pakistan currently ranks 145th out of 146 countries in the Global Gender Gap Index. With women comprising almost 50% of the population, we have more of an economical problem rather than an inclusion problem over here. When we look at the numbers, the funding numbers from the Deal for Tracker that we have been maintaining, the funding gap is even more striking. While male founders secured 81.25% of the total funding amount since 2015, female founders and mixed gender teams combined have raised only 18.75% of the total amount. The average deal size raised by female founders is also just $0.84 million compared to $3.03 million for deals raised by male founders. A look at the infrastructure in markets, we see another type of major bottlenecks over there. In power infrastructure, while we do have the capability of generating 46,000 megawatts, our transmission system can only handle half of this amount. The digital infrastructure shows a similar constraint. Despite having around 164,000 kilometers of fiber optic network, it only reaches over 1 million homes. This limited infrastructure makes Pakistan's internet connectivity particularly vulnerable to any kind of internet disruptions that come in. Recently, the country has also been experiencing frequent internet shutdowns, often politically motivated, resulting in substantial economic losses. I saw a similar question in the chat as well. So in 2023 alone, these disruptions have caused losses of around $238 million and affected 83 million Pakistanis. If we take a look at the transportation road network that Pakistan currently has, so we see that 2.4% of that network faces similar pressures, with comprising of 80% of the traffic load. An over-reliance on outdated road networks and the lack of interoperability between various types of transportation networks leads to a lot of inefficiencies, especially hurting the trucking sector and eventually hitting the logistics and mobility sectors. Lastly, while our markets comprise of a substantial 241.5 million population and with a purchasing power parity of $6,720, unfortunately, the poverty rates of 40.5% are significantly lowering the purchasing consumer spending power. If we take a look at the innovation landscape, we see another network of challenges widely integrated with each other. The R&D spending that Pakistan has comprises of only 0.16% of the GDP, which is significantly lower than the global average of 2.62%. This underinvestment shows up in the talent pipeline and creates a cyclical deficit of good and high quality human capital. Adding that to the problem of the severe brain drain that the country has been facing for the last 2 to 3 years, we see a major challenge opening up for the startup founders who are actively hiring. Lastly, just giving you an overview of the hiring challenges, 45% of the founders that we spoke to reported that they're seeking senior talent, but facing severe challenges around that. And while 60% of them reported that they are not even able to find skilled workers overall. Again, going back to the going back at these challenges from a lens of what needs to be fixed, we see that a systematic course of action can help us not only elevate these challenges, but also come across with solutions that, if addressed in a comprehensive way, with a structured and focused approach, can significantly let us unblock the true potential that the country has. So with that, and that is again something that Kulsum and Sarah would be taking up. So I'll be handing it back over to Sarah.
Thank you. So one of our hopes with this report was not to just put out data, but also kind of build an actionable roadmap that kind of paves the way forward in terms of what different parties can do to improve things and where opportunities for improvement lie. I'm going to keep this a little bit brief because I see there's a lot of questions in the chat, but we kind of mapped it with stakeholders because all these key stakeholders have an important role to play. I'll start off with the public sector or the government, without whose support and buy-in, none of this can happen. So there's a need to streamline regulations across the different government bodies and create one clear framework for startups to operate in. And this can include simple things like standardizing definitions, making compliance processes easier to follow, but essentially not making founders jump through a million hurdles for simple things. Again, going back to the digital infrastructure, since everything is so closely tied to broadband and internet connectivity, we have to reduce the rural-urban divide. In digital connections, we have to reduce the gender divide in access to digital connectivity and make sure that there's stable and uninterrupted access to the internet for everyone. There's also a need to offer tax incentives to local investors and family offices, again, to deploy more local capital into the ecosystem. Similarly, we also need to make it easier for foreign investors to move their money into the country and out of the country, because that creates a favorable environment for them to move their capital into Pakistan. For ESOs or support organizations, since the ecosystem has matured, founders have matured, they need to offer incubation programs that are aligned to high promise industries rather than just offering generic support to startups. Again, since there's such a big gender divide on the founder front, we have to offer targeted training to our female entrepreneurs. We also have to connect them to funding and essentially create more space for them to thrive. Beyond investors, ESOs should also have strong linkages with corporate partners and potential clients so that they can help startups access experts, marketplaces, and clients and help them grow on all fronts. The third critical piece is the private sector, which forms the backbone of our local economy. So large corporations with a lot of capital behind them need to set up corporate venture funds and also have their own accelerators, like we have at Telenor Velocity, Jazz Accelerate, so that they can work closely with startups and encourage innovation. These companies can also create structured pilot programs so that startups can test and validate their solutions in these large established companies, which is much easier as opposed to them doing it independently or on their own. They're also, we again keep focusing on an ecosystem integrated approach. So companies need to be more open with sharing their data, their expertise, their insights, so that startups can improve their solutions and also find the right product market fit sooner. There's a few more, and Kulsum, I'll hand it to you to finish it off.
Thank you. I think from, an investor standpoint, the recommendation for investors, I'm also on the investor side, so I agree with this. I think just given kind of the dynamic between investors and founders, I think there is an opportunity for the industry as a whole to, we think, to create standard but flexible term sheets. That is basically something that is still in favor of the investors, but also more fair to founders. We also believe, based on the recommendations here, that there is an opportunity to set up formal programs that offer mentorship and operational support from investors to founders. Obviously, a lot of investors are involved with a lot of programs that are in Pakistan, but I think there's an opportunity for them to engage further. And finally, I think for a lot of investment funds right now, many of us are moving from our fund ones to our fund twos. Many of us have been sector agnostic so far, maybe creating more sector specific investment strategies that match the market needs of Pakistan as well as where opportunities are. And I think we'll see that happen more as the ecosystem is evolving and maturing, but also as the funds in the ecosystem are also doing that. On the academia side, we know that there is so much happening at the university level in terms of innovation, but basically there's still so much that can be happening. So aligning curriculum to match what the market needs are, including entrepreneurship education in all fields of study, but not just in a very rote memorization way, but maybe something that is a little bit more practical, something that is more applicable to today's world. Focus on producing quality research just versus just on quantity. And I think there just generally needs to be more of a focus on technology transfer. So everything that is happening at the university level, how are we transferring that knowledge and making it more actionable in the real world? Generally, we need to be building more stronger connections with industry to make sure research tackles real market needs. And that is it in terms of there's a ton of questions, so we want to make sure that we get to it. I'm going to stop. This is actually the code that you can use to also download the report, but we have the link in the chat. I'm going to stop my screen share because it's really difficult for me to read the questions and also share my screen. But we have a lot that's in here, and we want to make sure we try to get to as much as we can. So in terms of, let me go up. In terms of, there's a lot of stuff in here. So we've talked about the sectors and the industries that have survived better in the last 2 years. Sarah addressed that before. I also just want to maybe zoom out for a second and talk about why fintech is maybe outstripping e-commerce in some of these sectors. I think what we've talked about in the report is that there has been a lot of focus on businesses that are, where cash burn is relatively low, where it's, we've moved away from the growth at all costs type of mindset that we've seen that was really prioritized before with a lot of this VC money that was coming into the market. Just given the funding scarcity that we're seeing right now, we're seeing really kind of that focus on building sustainable businesses, as Sarah mentioned. At the same time, when we think about it from a sector perspective, that also means that sectors where that require a lot of cash are probably going to be attracting less funding than before. And with fintech, in the last few years, with regulations opening up, it's obviously less of a cash intensive business. Generally, we're seeing that opportunity be very large given the regulatory environment, but also it's easier to build more attractive businesses that are relatively more easy to scale. And so I think that's another reason why we can also see fintech really growing there. In terms of, I don't think we have the numbers in terms of how many percentage of companies that raise funding are catering to global customers, but just to put a plug out there, there is a lot of raw data that Invest to Innovate puts out for free, and you can look at the deal flow tracker that IDI has on our website, where you can actually see the companies and the raw data in terms of funding that's there. But I don't know, Amna or Sarah, if you have anything that you want to add into that. Okay. In terms of funding that's coming in from GCC or North America, I do know that we have numbers in terms of international funding that's come in the report. Amna or Asara, do you guys want to share any of those insights there? And I can kind of provide a little bit more qualitative on what I'm seeing as an investor as well.
Amna, do you want to take this? I'm just sharing the link to the DFT.
Okay, I think I need to run through the numbers, but we can put it out later.
I mean, we don't have to put it out later. It's actually in the report, guys. So if you open the report, you can actually see that general international VC funding has gone down. What I would say qualitatively is that that number is more, if we're looking at where startups are raising funding from outside of Pakistan, it's much more likely to come from funds in the GCC and the Middle East. And so that's really where we're seeing that capital that's coming in. Obviously, there are players like Sturgeon Capital, which isn't a MENA player. It's a fund that's a little bit more focused on Central Asia, and Pakistan is part of that mandate. But generally, I think if we were to look at these trends overall, back a couple of years ago when funding was flowing really freely into Pakistan, a lot of those investment funds that were these international VCs, Pakistan was actually never part of the mandate. We were always part of the exception. And I think when funding is drying up, it's because that is always the case. So there are very few international funds globally that have Pakistan as part of the mandate, but many of the GCC MENA funds do have Pakistan as part of the mandate. So that's really where we're seeing that divide there. Um, in terms of regulations that are holding the Pakistani startups back and need to be changed, we've detailed that a little bit already in the presentation. It's very detailed in the report, so I would recommend going through that. Sarah basically talked about the need to really think about how investors can repatriate their money more easily. Generally, the flow of money in and out is a major challenge for startups and investors alike. It actually is what prevents, from a perception perspective, people wanting to put money into the market. And we've also seen, if I was to zoom out and give commentary about the ecosystem, um, we really saw the startup ecosystem take off, as we mentioned before, in 2021 and 2022. There were a number of reasons that all happened at the same time, but one thing that happened from a regulation standpoint was the state bank allowing startups in Pakistan to set up holding companies abroad. And that actually unleashed an opportunity for people to put money more easily into Pakistani startups because of the HOCO legislation. The reason why I bring that up is because regulations can really make or break the startup ecosystem. And when you have regulations that are holding things down, when we've seen infrastructure hold things down, it really can actually throttle the evolution and the growth of the space. And so I think as much as these regulations are, I think that's why it's really important to think about how this report can be taken to advocate for regulatory change, especially even on the tax front. So oftentimes, whenever we have the major players in the room from the regulation, the SECP, the State Bank of Pakistan, FBR, which is our tax regime, is often missing in those conversations. And I do think that that is a major player that needs to be there in terms of reform that needs to change. Sarah or Amna, do you have anything to add to any of that?
In terms of what needs to change, I think Kulsum, we've covered that. But like I mentioned in my presentation also, the SECP held its first startup summit. So there are forward-thinking regulators that are now understanding the potential that this holds for the economy. The first step is engagement, right? So they're engaging with key players. They're trying to understand what the problems are. The next step is change, putting forth policy changes and then seeing those implemented. So even on that front, this noise is not in a vacuum. Players are talking to the actual regulators. A lot of the growth that we saw in fintech is because of the support that the state bank has displayed in terms of ease. So again, if you zoom out a little bit, you'll see that 10 years ago these conversations were completely non-existent. But as of now, there's real momentum here, and there's a real opportunity for change too.
Yeah, and I agree with that. I think even beyond the state bank, SCCP has been a very friendly regulator generally to the startup space. I think the SCCP sandbox, which is something that we talk about in the report as well, has really allowed for innovation in the space. I think what's really important, and we do talk about this in the report, is to really have all the players from the regulatory standpoint be able to speak to one another. And obviously, from an FBR perspective, that is actually a game changer if any sort of tax breaks can be cut. And obviously, the Special Technology Zone, STZA, is trying to do a lot of efforts to actually help improve this by helping startups register within these special zones, have tax breaks, all of that. But I do think generally the regulatory space still has a lot of room for growth, as Sarah mentioned as well.
So another thing I would like to add there, that if you go back to the report, you would also see that the quality of the human capital generally in the regulatory sector, it's quite good by the average standards of the global standards. However, the lags that we are having at the digital infrastructure and the physical infrastructure, those are the intrinsic challenges due to which even the human capital or the people who are taking up those conversations, there's a will and want to change and be progressive. But due to those structural issues, like I also highlighted, they're not able to make that much of a progress. And similar to other scenarios, also most of the conversations are happening in silos. So there needs to be a more integrated approach. So collectively, we could move towards a one window solution approach. But for that, all of those regulators need to sit together continuously at one table.
Yes, and it shouldn't change just because the government changes, ideally, based off of that. Um, there's a good question in here about funds. It also includes our fund in the question, which is IDI Ventures and Surmayakar raised funding. Gobi, which has, formerly Fatima Gobi, now is just Gobi, announced a $15 million fund. Are things opening up? And I think what's really important to keep in mind here, yes. I don't think with Surmayakar, they didn't announce that they raised funding. They announced that they are launching a Climate Ventures fund. So I think what's really important for people to pay attention to is there's often a bit of a lag between when people announce a fund is happening versus when they're actually going to be able to start deploying. So even with Gobi, even though they've announced their $15 million fund, they likely, and they've mentioned this before, they will likely won't start deploying that for a couple quarters from now. Surmayakar is similar. With us, we were really lucky to have IFC come into the fund. That was actually helped us close Fund One. But what I do think is important for people to zoom out about is, there is relatively lower amount of liquidity amongst these funds because as much as startups have been impacted by the global macro situation, by the local macro situation, funds have been too. All of us have actually had a slowdown in our own fundraising process, which means that, if our slowdown is happening, that trickle into other startups is also happening. So there's this waterfall effect of what all of this means. And so I think as things are opening up, which is a positive thing, obviously Indus right now announced their close before and is actively deploying, has announced some deals. I do think that that has also been why we've seen a little bit less activity amongst local funds as we've been, or local as in Fox Fund focus funds, as we've all been trying to currently raise and close our funds and raise future funds. But I do believe that in 2025 we'll see more liquidity happen and more deployment of capital happen. But in 2024 we can probably point to that issue affecting funds as much as it's affecting startups into seeing that dry up. Is there another question, Sarah, Amna, that you want to take? I can also guide us into what I think we should. I think the question about growing to GCC is a good question of why is there so much interest in growing to GCC? Amna, Sarah, I don't know from the qualitative interviews, and I'm happy to share my own personal thoughts on this, but if you want to share from the qualitative interviews about why so many startups are looking to Saudi and looking to the UAE and GCC expansion, can you share a little bit more with that?
So yeah, I can take that. For starters, so one of the core challenges that any startup that is operating within Pakistan and having a very hyper focus on the local market, therefore, of course, the poverty figures that we just shared, combine that with the general national, the GNI numbers that we are having, unfortunately, and then the purchase power parity. So in the last 2 to 3 years, the general power of consumption for an average person has fallen significantly. Combine that with the increase in the inflation rates and the interest rates, we have seen less propensity for anyone to actually purchase internally. So that naturally pushes any startup founder looking to expand or just to maintain their unit positive economics to look at regional expansion. That is one of the reasons, and any other aspect from an investor's lens, if Kulsum, you would want to
Yeah.
touch upon that.
Yeah, I agree with everything Amna said. I know it's reflected in the interviews for startups as well. I think the challenge is there's a big question here, right? Is can a Pakistan only startup become a quote unquote unicorn, right? Can that be $100 million company even, right? And I think one thing that is a bit of a challenge to what Amna said is with the macros being what it is, we're seeing that those consumption levels decreasing. It's becoming more and more difficult to show real traction in a way that is exciting for international investors and local investors alike. Obviously, with the devaluation of the currency, that also impacts returns. And so, what we've also seen is that startups like Abhi, as an example, which is a company in our portfolio, a company actually in a few of the funds portfolios, global fintech now or regional fintech. What they realized, the co-founders, was that in order for them to even raise later stage rounds of funding, being Pakistan only was going to be something that would be a challenge for them. Not only because you wanted to be able to show real growth, but also because of the market perception of Pakistan, right? There's a lot of risk associated with the Pakistan market alone. That being said, while I think it's important to say that companies are growing to the GCC in order to show, that there is growth, that they're able to be attractive for later rounds of funding, I think it's also important as an investor when I see companies that are growing mindfully to the region. So growing because it makes sense for their business and not growing because they believe that's what will attract capital. And I think that's a really important distinction for me. We have companies in our portfolio that are purely Pakistan plays, and I think that's great. So we've been invested in Dealcart, which is, their recent raise of $3 million was reflected in the 2024 numbers in the report. Dealcart is a e-commerce grocery play. And they have been very focused on Pakistan because that's really what they want to conquer first. And I think that's really smart. They didn't grow to Saudi Arabia or to the GCC generally just because it was, sexy to do that. And I do think that that is important for startups to take away as a lesson here is don't grow just because you believe that's where funding is. Grow because it makes sense for your business and for your business model. So that's me both wearing the hat of the report, but also me from an investor standpoint, what I think is important for people to be paying attention to. I would say that about 60% of our portfolio have thought about expansion, have changed their models to be a little bit more focused on that sustainability, being more productized in what they're building versus being very operationally intensive. All of those trends are things that we're seeing in the market as a whole. Anything you want to add there, Sarah? Even with what we're seeing with iScale?
Yeah, I think Pakistan's a tough economy right now to survive in. So a regional play also is a survival tactic. And within our accelerator, we do offer support to startups that are looking to do that. However, there are a few things that are very important. There are some regional similarities that startups try to capitalize on. Again, founders that are very clear on the problem that they're solving and understand how that can be scaled into another market to diversify their revenue, to become more healthy financially. Those are the startups that essentially effectively end up scaling to these markets. And even that we see in like a phased out approach. They first go out and figure out the market, do the business development, understand the dynamics, because there's a lot of legal, cultural, localization that has to be done before you just get up and can scale to either the GCC or the Saudi. So right now, I feel like it's kind of a need for startups who are thinking big, and then there are others who've matured enough and are ready for a regional play. So there's a mix of both there.
Great. There are so many questions in here, guys. So let's try to pick a few. Maybe Sarah, do you want to pick the next one to tackle for all of us?
Yeah, I think there's a question on what can be done to promote entrepreneurship and funding from local investors currently investing in real estate.
It's a
So
good one.
there's two big problems we feel that are currently holding back local investors from getting more involved beyond policy and regulation. One is just a lack of understanding of what this landscape looks like, what it entails, what stage uh, an angel comes in, what they get in return, what kind of risk appetite they need to have, what sectors they should get involved in, because angels who are very different from VCs and come in at a very different stage than VCs do much more than write a check. They also play a very strong role in helping with business strategy, introducing them to new clients, kind of helping shape the startup as it moves forward. So I think education capacity building is one thing that we haven't done that well at an ecosystem level. And if we improve that, offer more opportunities and upfront look into what this arrangement entails, and then also speak of success stories, because we have startups that have had angels come in at very crucial rounds, and then that became a lifeline for them, and then they went on to become sustainable. Um, so more education capacity building. And then the other piece that discourages investors is because they're looking for a return, they need transparent, reliable data. And that is missing at an ecosystem level. We don't have centralized data repositories. They struggle with finding the right deal flow, the right founders. So if we can fix both those problems, which, as I mentioned, I2I is also working on, we can actually bring in volume and then eventually also see successful deals coming through.
Mhm. Thanks for sharing that. Amna, there's a good question in here about, does this report compare Pakistan with other similar ecosystems? What is the right comparable for Pakistan? I would love for you to share that because I know we do have some numbers in the report, how we compare to others.
Yes. So we did a regional comparison with a total of 6 countries. So while mapping out those countries in itself, we were cognizant of the fact that we do have a peer level comparison, and then we're comparing with countries who have fared better than us over the last decade or two. So in that context, India and Vietnam have been placed towards the upward side of the trajectory. And then we have Bangladesh and Nigeria, which to some extent we can say that we tend to have a regional comparison at a peer level with these countries. And then we have Indonesia, but Indonesia tends to fare a lot better than Pakistan. If we go back and look how these ecosystems matured over the time, we'll see that there were common starting points. But due to the consistency of having so many inconsistencies for a country like ours, unfortunately, that continuity in the evolution of the ecosystem has not been there. But again, if someone would want to drive a parallel, so I think you can start with Bangladesh and Indonesia, and in some scenarios, it could be Egypt as well.
Yeah, I agree with that. I think there's a lot of similarities when we look at the Bangladeshi ecosystem now, and then also Egypt right now. I think there's obviously a lot of differences, but I think that even in terms of macro challenges, looking at what Egypt has been doing right now versus with us, obviously there's a lot more inflow and a lot more funds, honestly, locally in Egypt than there is in Pakistan. So there's actually a lot of room for us to grow. I think one of the biggest challenges that we've had, if I was to even look qualitatively at us versus other ecosystems, is that Pakistan really hasn't had, we've had, with what Gatatech was able to do with their big success story. I think that's been really important. It was a company that bootstrapped, never had to raise funding, but we really haven't had a lot of very solid exits. And I don't think and I know investment funds also, all of us have not had that quote unquote success yet from an exit standpoint. And I think with other ecosystems, particularly India, Vietnam, we have seen that happen, right? And as a result of that, you end up proving the point that this is a market that people should be putting their money into. And I think that tends to be from a very qualitative standpoint. This is my own experience as an investment fund. That becomes the biggest question, right? Is how can you actually say that this is a high potential market if exits haven't come yet? And so it's a chicken before the egg because you need to invest in the market in order to see that. But it's also why it's difficult for us to have a direct comparison because a lot of the downturn in Pakistan happened before we had even reached that real sense of success yet. So inshallah, we'll still get there, but we're kind of in that frame of like moving towards it. So to what Amna was saying, I do think Bangladesh and in Egypt are kind of that fair comparison, but I think the study does a really good job of benchmarking us against the others just so you can see where we fall right now. Is there another question that you guys want to take in the chat?
I want to take the one on talent, on the
Perfect.
talent
Go ahead.
pipeline. So the question is, does Pakistan have the right talent pipeline that's required to build a unicorn? And talent is an issue that came up from different stakeholders, from investors. They were talking about, founder capabilities. When we spoke to founders, um, they were complaining about being unable to hire people in high strategic positions. Entry level positions are easy to fill up, but um, it's harder. It's getting harder and harder to find senior level talent, and then also to retain them because a lot of the brain drain in Pakistan right now is pretty serious. And again, I think there's also a very important role that academia plays here. So the quality of graduates that we're producing, the kind of approach that they have towards entrepreneurship, them seeing it as a viable option, understanding what goes into it. I think there is significant room for improvement there. However, I personally do believe that Pakistan has the talent. They're probably maybe not directly involved in the ecosystem. A lot of the earlier talent that we saw in 2020, 2021, that kind of glamour and appeal is kind of slowed down just because of the overall slowdown in the landscape. But again, over here, media can play a very big role. The kind of stories that we're telling about the founders that are building, and being a founder in Pakistan is an extremely, extremely hard job. And we do have successful founders who are putting their head down, who are building for sustainability. There are very important stories there. They have very strong mission alignment with why they're building. So, kind of bringing those stories through, I think, will also help attract the right talent. So getting academia more involved, getting the media more involved, I think that will help us get to smarter people faster and bring them into this space.
I think that's a really good point. Just one thing that I wanted to point out here, because someone mentioned, I keep losing it because there are so many great questions in here, but it was about why is funding basically the metric here? Because people could be raising less, but actually be doing well. And I think that's actually a really good point. I don't think that startups, I mean, when we take 2021 and 2022, we were seeing our country's leaders tweeting about airlift rounds and, Bazaar raising and all of that, and Abi raising and all of that. And we saw that as our metric of success. And I do think that it's important as, scarcity is happening in the market, that we don't necessarily have to attach funding as our metric of success. It's actually why the report is so important because we want to go beyond those numbers. We want to actually detail everything that's happening in every single lever of the ecosystem. And also, as we've seen with, what the Gaddett brothers were able to do with their major, with the acquisition that happened. You don't have to raise funding in order to have that acquisition and have that success story. So what I do think is important here is to say that, for startups and founders that are building, you don't have to raise funding to be considered a success. You don't have to raise funding, period. If you can if you can build a business that has good unit economics, that reaches sustainability, you may never have to raise. Or even with some of the companies in our portfolio, they may raise that initial round, but then may never need to raise future rounds of funding and can still have that liquidation event, can still have an exit happen later from, whether it's an acquisition, whether it's some sort of listing on some regional stock exchange. So I do think that that's important to state. And I do think that the report kind of highlights that, we want to go beyond these metrics that we typically see as like what we deem as success in an ecosystem. Anything that you guys want to add on that?
I would like to club a couple of questions on number one, why the
We have a
quality.
minute, so maybe just club one or two questions together.
Oh my God. Okay. So I'll just answer rather than talking about the clubbed questions. So in terms of the quality of the founders and the maturity of the startups that are coming up, there are two very interesting parallel streams going on. Number one is the investors are seeing a market reset and the great correction in order, but at the same time, the quality of the founders or the startups is not up to the mark as it was expected. At the other end, if you go and talk to the founders, I saw a lot of founders that were building businesses which were unit positive, very much sustainable, and had a sustainability path laid out for them, yet they were not interested in raising capital and doing fundraising. Now, this was a very interesting find. And when you speak to such founders and why you don't want to raise, because they have the fear of the unknown and think that the black box of funding is of course holds its own mystique, but they think that this is something that is very tough to crack. And not having enough knowledge on how fundraising works, they tend to shy away from reaching out to those investors. So I think uh, being lucky enough to be talking to both sides of the table, I think there is a need for increased discourse, communication, and understanding of how fundraising works and creating more content and training materials around that. And again, this is something that I2I Scale is actively addressing, not only before PSR came out, but is also part of the future context of the training materials and advisory that I2I is poised to roll out as well. I hope I am within time.
You are within time. And sorry, I got kicked out. So I came back in and luckily could unmute myself. Just wanted to, that was great, Amna. And thank you guys so much. Thanks to Sarah and to Amna, who Amna and the Insights team, a lot of whom are on this call right now, put in so much labor into this report for the last year. So major, major kudos to them, to Sarah, and to the entire I2I team, because it was really that team effort that got this report out. It's a real labor of love that we put out every few years, and this one was no exception. So thank you everyone for your thoughtful questions. As Ali mentioned in the comments, feel free to send him an email. He can forward it to us in terms of any feedback that you have, anything you'd like to see more of. And then you can always feel free to reach out to any of us on LinkedIn. And please download the report and read it and give us feedback. That is why we create it, not to be put out into a vacuum, but to actually get feedback from all of you. So thank you all so much. And thank you to Sarah and to Amna, and many, many thanks to Ali Fahad and the whole Buck Launch team for always giving us space to share what we're doing.
Thank you.
Thank you.